Hello and welcome to the Global View on this Monday. I'm Andrew Gagan. Thanks for joining us here at AusBiz. Well, let's get to the news of the moment. Israel launching a new wave of strikes on the Iranian capital of Tehran, while Iran has responded by launching more missiles at US assets in the Middle East. This follows the assassination of Iran's Supreme Leader Ali Khamenei, which has thrown the region into chaos and put the global economy on edge. Overnight, President Trump further encouraged the Iranian people to topple their government while saying that Iran's leadership wanted to talk to him and he had agreed. However, he subsequently said the conflict could last for 4 weeks. Well, the US president also saying the US military had destroyed 9 Iranian warships and was going after the rest, while the US has confirmed that 3 service personnel have been killed and 5 seriously wounded. Well, commodities are in focus amid warnings of rising energy costs and disruption to business in the Gulf, which is a strategic waterway and global trading hub. The Strait of Hormuz, through which around 1/5 of global oil supplies transit, is effectively closed. Iran's Revolutionary Guards claim to have hit 3 US and UK oil tankers in the Gulf, while hundreds of vessels, including oil and gas tankers, have dropped anchor in nearby waters as soaring insurance costs halt trade. Meanwhile, business hubs in the Gulf, including Dubai, Abu Dhabi and Doha, have come under attack from Iranian missiles. Well, US yields fell on Friday despite the producer price index rising 0.5% there month on month, which was more than expected. The US 10-year was down 7 basis points at 3.94%, the 2-year at 3.37%, the Aussie 3-year government bond yield falling to 4.16%. The US dollar has risen along with safe haven currencies, including the Swiss franc, while risk-sensitive currencies such as the Aussie dollar have fallen in early trade. The Aussie currently at 70.6 US cents. Well, oil prices had risen around 3% on Friday ahead of strikes on Iran. Iran exports around 2% of global oil supply, but 1/5 of seaborne oil passes through the Strait of Hormuz, with a similar share of LNG transiting the strait and about 1/3 of globally traded fertiliser. Iran's foreign minister said his country has no intention to close the strait, but insurers have told ship owners they would cancel policies and raise prices for travel if they attempted to pass through the Gulf and Strait of Hormuz. Brent crude jumped 10% to about $80 a barrel on Sunday, while OPEC Plus said it plans to boost production. Gold rose to a near 1-month high on Friday ahead of the outbreak of hostilities. Spot gold currently up around 2% at $5,275, and Bitcoin, well, that's fallen back to around $65,000 as investors dial back on risk. Well, global stocks fell on Friday, weighed down by ongoing concerns about high valuations and the threat of AI disruption. On Wall Street, financials and tech stocks were hit hard, with US stocks suffering their largest monthly percentage decline in a year. Financial stocks slid following reports that Barclays, Jefferies, Wells Fargo and other banks face potential losses related to the collapse of UK mortgage provider Market Financial Solutions, those stocks falling sharply. In the tech space, Nvidia extended the previous session's losses despite solid earnings. Zscaler plunged after the cloud security firm reported a wider net loss in the second quarter, and Netflix shares surged as investors welcomed its decision to abandon its bid for Warner Brothers Discovery, with Paramount Skydance the likely buyer. And Block shares surged after the payments firm said it would axe nearly 1/2 of its workforce as part of an effort to embed AI across its operations. And Dell also surging after the PC maker said it expects increasing revenue from its key AI-optimized service business in fiscal year 27 and promised to return more cash to shareholders. All right, let's now get to some market reaction of what we've seen in the wake of the outbreak of conflict in the Middle East. Matthew Goodson joining from Salt Funds. Matthew, welcome back. Let's start with how you've opened there in Auckland.
Morning. We're down about 1.3% at the moment. Very light volume. Wouldn't read too much meaning into those moves as of yet. And we don't really have any major listed companies with direct oil or gold exposure. So, a little bit hard to read too much into it until we see US futures and oil futures open.
Yeah, what are your expectations on that front, Matthew, particularly where equity markets are likely to go given the extreme volatility and, of course, uncertainty we're seeing at the moment?
Yeah. Look, you tend to often see a sharp initial move, and then that corrects itself as the nature of the situation unfolds. So, I think we'd need to see the Iran situation carry on for some weeks. I think for markets to really fall sharply, and I think we'd need to see the Straits of Hormuz. Through which 20% of oil supply is transported, we need to see them closed or severely constricted. I think for there to be a major lasting market reaction from this.
I mean, clearly commodities are in focus, primarily energy, because as you just
Mm.
mentioned, there the potential restriction on those supplies, given a fifth of oil trade goes through the Strait of Hormuz. So, what are you seeing there at the moment, just as far as the likely response for traders in oil?
Yeah, look, over-the-counter trading reportedly has seen rises of up to $10 a barrel, but we're yet to see futures open. We'll just have to see. Iran's clearly said they'll keep the straits open, but for now, until companies have war insurance in place, it's very difficult for the tankers to transit. I think what's different this time, to say, if you go back to the early 90s in Iraq, is there don't appear to be any plans for boots on the ground. So just what follows from this, whether there's a coherent opposition in Iran, which seems unlikely, or whether there is a new group in power in Iran who will negotiate with the US, is I think clearly the preferred outcome. Or the bad case would clearly be if we end up with a power vacuum, warring factions, and unrest through the area that persists. So
Yeah.
initially the market may focus on the risks of that scenario, even if it's hopefully a less likely one.
Well, of course, at this point, all of that is very unclear. Now, as a result, also, given that uncertainty, we are seeing precious metals likely to take another significantly higher.
Yeah, that's right. I think that's the obvious play. The bond yields did rally late Friday in the US, despite that much higher than expected core PPI number. It's very much a flight to safety. But of course, this is a negative supply shock. So, it's both economically contractionary and inflationary if it persists. So, a flight to safety in bonds isn't quite as simple a trade as it may appear. So, a knee-jerk flight into gold appears the most likely outcome.
Well, let's just focus on what you're seeing in New Zealand at the moment. And I see you make the point that haven't seen the same sort of volatilities we've seen on this side of the ditch, particularly in the wake of reporting season. What's your observations?
Oh, look, Australian reporting season was, the response to minor beats and minor misses was extreme. I saw some work showing it was more than 3 standard deviations greater than normal. And I just think it reflects the mix of investors that are in the market these days. A higher proportion of passive and a higher proportion of momentum-seeking investors relative to those who are willing to take a medium to longer term view. So you do get this tremendous volatility, which can then even reverse itself intraday or the next day. So it's an interesting period for fund managers. New Zealand, thankfully, was a lot quieter. Reporting season companies were generally there or thereabouts, and we just didn't see the same degree of reaction. So, certainly much quieter this side of the Tasman.
In fact, I see you pointing out there's some further green shoots appearing, particularly in terms of earnings.
Yeah, look, it wasn't a bad earnings season. Companies more or less made or slightly beat their numbers, and guidance wasn't exactly that things are flying looking forward, but was generally cautiously optimistic. So, I think for the first time there's light at the end of a tunnel, and it's not a train coming the other way. But by the same token, it's still not all one-way traffic. We had a slightly weak consumer confidence number come out on Friday, albeit a reasonable business confidence number. So things are slowly picking up, but only slowly.
And what are you seeing in the residential property? I notice, I mean, obviously there's a focus here, given rates are now on the rise. What sort of sentiment are you seeing there in terms of residential?
Yeah, look, we've seen house prices are now down 10 to 20%, depending on region from peak. And over that period, we've seen reasonable wage inflation. So, in real terms, housing's a lot more affordable, but it's merely gone from exceedingly expensive to unaffordable. We saw during the month, actually a few days ago, the Reserve Bank's first monetary policy statement of the year. It was slightly dovish relative to expectations. So that helpfully saw 2 and 3 year swap rates rally 25, 30 points, and we started to see the odd fixed mortgage rate decline. So there's some hope that we may see a slight pickup in housing this year, but it's still from levels which is somewhat unaffordable. So I think it's going to be much more of a 2027 story than a 26 story.
Matthew, great to get across what you're seeing in markets. Thanks for joining us from Salt Funds.
Pleasure. Thank you.
All right, let's focus on the local market ahead of the start on this Monday, first trading day of the month, of course. What a way to begin. Now, perhaps we shouldn't focus on that particular number there. That's not accurately reflecting what we're seeing. Expecting a negative start. In fact, that's off the back of the close we saw, particularly on Wall Street on Friday. So ASX futures, that particular number hasn't caught up. Latest read that I saw was potentially down around 1/5. Mind you, we just heard from Matthew Goodson there. The local market in New Zealand down more than 1.5%, but that was in very thin trading. All right, we're going to get across it all in just a moment. Stay with us for the open.